Are you focused on strategy and growth? At tTech, we manage customers' IT infrastructure to detect and fix issues before they become problems, so your IT team can focus on managing growth. For an affordable monthly fee, we'll provide technical support and full problem resolution. Call tTech today.
Good morning, ladies and gentlemen. And in particular, I would like to welcome those who are joining this first tTech investor briefing over the internet. The briefing this morning is going to be led by myself, Edward Alexander. I'm the executive chairman of tTech. And along with me will be our chief executive officer, immediately to my left, that's Chris Record, and Hortense Gregory-Nelson, who is our finance and administration manager. The purpose of the briefing today is to try and inform the investment community a bit more about tTech. We are a bit of a unique company on the Jamaica Stock Exchange. And one of the things that we realize that we need to do is to be able to clarify a bit more about what exactly tTech does, what our strategies are, what's happening with respect to our performance, and what are our plans for the future. So we hope that we will have a very vibrant discussion this morning. I am going to be handing over to Chris briefly for him to give some opening statements on the company's first quarter's performance. But before we do that, just like to remind or to indicate that those who are viewing us through this online stream can participate by submitting questions to company.secretary@ttech.com.gm. Let me repeat, you can submit your questions via email to company.secretary@ttech.com.gm. All right, so ladies and gentlemen, thank you very much. Welcome again. And let me hand over to Chris. He can give some comments, particularly on our first quarter's performance.
Good morning, everyone. Thanks for logging in. Thanks for watching. You may be watching this delayed. Thank you also if you're watching it. All right, so quarter one for 2018 saw an uptick in our performance compared to last year. We saw revenues of $69.8 million, an increase of 23.3% above the corresponding period in 2017, which was 56.6. Now, where did this come from? How I see it as my former role as head of sales and marketing, I see it as reaping the benefits of our marketing seeds that were sown in 2017. All our services and products saw improvement and increase in this quarter. Our consulting team closed out a very major opportunity. And these opportunities come from us leveraging all our resources and assets in the relationships we have out there in the market and also the marketing activities that we have done. And so a huge opportunity was presented to us, and we negotiated, and we took this opportunity. So that's consulting or program management. Program management, what that's all about, is managing multiple projects at the same time. And so as a result of that, we have had this bump. Also, we saw an uptick in our managed services. Now, managed IT services are a little different from what everybody else does. Most people do what they call break-fix services. So people call them, they have to wait, someone has to come, and then a repair takes place. Not tTech. Our managed services are, you sign a contract with us, and our job is to make sure that you keep working and keep operating. So we saw uptick in those services with several new clients coming on. The other area of growth for us in 2018, especially in Q1, was our IT security services. IT security is a concern for most folks out there, most organizations. They come to us for various services around IT security in the areas of penetration testing, where our team goes in and the experts try to break into your system using all the various things that hackers would do. And we also did some vulnerability tests for customers, where we run specific software with hardware in the organization, and we look at all the vulnerabilities of the equipment that might be in there. Because unfortunately, most organizations have equipment that are sitting there that they haven't updated the software, they haven't patched it. And what our team does, we actually go in and do that assessment to ensure that you're where you are, and we also give you feedback and as a list as to what you should be working on. So we saw uptick in those services. Huge in everybody's agenda is also cloud. Most folks are trying to figure out what this cloud thing still is. It's been here for over 10 plus years, but we still have folks making that last minute decision. They need to buy new equipment and servers, and there, several organizations have come to us and said, look, we would like to experiment with putting some of these things in the cloud, and so we have seen some take up in those services also. And last but not least, the only product that we actually sell here is a PBX system. And we actually saw one major project, several more coming on stream. Our customer here in Jamaica actually purchased a system to be deployed in the Eastern Caribbean, and that's where that sale was. So that's what contributed to our Q1 results for 2018 Q1. Teddy, back to you.
All right, thank you, Chris. And thank you for that nice summary of the company's performance for the first quarter. We do have a couple of questions that had come in, and one of them you actually addressed. It was what drove the 23% revenue growth in the first quarter. So I think you're ready to address that one. This one is a little more forward-looking, and it speaks to what does tTech consider its growth drivers for the next 3 years. So would you like to comment on that?
Yes, so monthly recurring revenue, which forms part of our managed services. All our managed services are, in fact, contracts that we sign over multi-year. That's key for us, and that is where the majority of our continued growth will come from. I mentioned IT security. Our IT security services continue to be very busy. Last year was an increase on the year before. 2017 was an increase on 2016 in terms of IT services, and we see 2018 increasing also with the number of requests that we've gotten so far. Last but not least, for big growth areas is our consulting. We recently signed a contract with a company called Loris Technologies for an application called FileNexus, which is enterprise data management, file archival systems, and also workflow processing. So we have had a fair amount of interest in that, and so that's one of the areas that we see growth for the next coming period.
Okay, thanks, Chris. Actually, there was a question that came in about Loris, and would be interested. Maybe you could expand a little bit. Or the question that actually came in was, tTech recently inked a partnership with Loris Technologies. What does this partnership look like, and how will it assist tTech in expanding its suite of services to diversify its income and enhance shareholder returns?
Okay, so
maybe you could also speak to recent activities.
Right. So Loris Technologies is an organization based in Toronto, Canada. Loris makes one thing, and they make an application called FileNexus. When we first met with the Loris team, we realized that these guys are laser focused on supplying enterprise content management. So the whole idea of what they do is and there's a diagram that they have that shows a filing cabinet, audio files, folders, all of these things coming into a digital environment, into your PC. And so it's the whole idea of digitizing all of those things. So one of the things that we consider is the on-ramp to digitization, is the on-ramp to creating a digital platform in your organization. Many folks have very paper-intensive processes within their organization. But one of the challenges is that they don't want to change their processes. Their processes work. They are put in there for a reason. So we found FileNexus as a fantastic on-ramp where they could, if we're not changing the processes, if the printer printed it, instead of printing it to paper, print it to the FileNexus system. And what the system does, it captures your workflow. So if an application for an invoice came in and our finance department was supposed to review it first, and they're supposed to give an approval, and it's forwarded to me for approval, and then maybe a certain limit may have to go to the board. All of these things are put in a digital process, and that's what the system is able to do, capture all of that. So recently, we had the CEO of FileNexus, of the organization that makes FileNexus, Loris Technologies, visit Jamaica, and we did a series of presentations to some prospective customers. The excitement was high, and as a result of that, he asked the senior VP in charge of technology to visit the following week. And so as a result of that, we've had a number of visits and demonstrations, and we are working right now to deliver a fair amount of proposals and proof of concepts and just ideas as how the system to work for some customers. So that's what we've been doing for FileNexus for the last few months.
All right, thanks, Chris. One of the things that is very significant to tTech is this whole business of what we term monthly recurrent revenue. And I dare say it's not a common term, certainly in the Jamaican market. And I think, Chris, it might be useful for you to explain a little bit more what exactly is monthly recurrent revenue and how does that differ from other types of revenue, such as project-based one-off revenues.
Okay. So our organization, we have projects. IT security can be project-based, and IT security can also be long-term contract-based. A fair amount, most of the times, IT projects are coming as someone is asking to come do a specific job where there's a website that they're building and we need to do a penetration testing on it. So our team will go in and do work around trying to make sure that nobody can break in. Well, they try to break into the system and they provide the results to the customer, and the customer pays us, and that's the end of that. So that's a project, one-time revenue. It may happen Q1, it may happen Q2, may not ever happen again until the following year. There are some companies that have ongoing contracts with us to just test those systems. With a monthly recurring revenue opportunity, which is the majority of our managed services, how that works for both us and the customer. For the customer, is a predictable cost to their organization. So they know upfront for the entire year, for next year, for the next 2 years, what IT is going to cost them, unlike what happens right now. What happens right now with many organizations is that they feel that I'm going to buy IT product or something, they're going to save money because they're just spending one time on it. But what happens is that all of a sudden there's a project that pops up, and all of a sudden their cost and their budget goes out of whack. So for monthly recurring revenue for on the customer side, for them to pay us, it's predictable monthly. For us, it's also predictable monthly revenue. And that revenue starts, whatever the contract is, and it goes up incrementally month by month by month by month. And so that is the type of revenue that organizations like us look for. It's the same type of revenues that the cell phone companies and TV companies, cable TV companies. It's a better type of revenue to have. That's what we consider in the managed services business. Hope I clarified it.
Well, hopefully. I'm sure if anybody needs further clarification, again, you can submit questions. Just a reminder, anyone who wants to submit a question during today's morning's briefing, the email address to send it to is company.secretary@ttech.com.jm. I think the next question that came in, maybe I'll address it. Question is, how has going public assisted tTech's operations and client acquisition? I think it's fair to say we went public we were listed on January 7th, 2016. Correct, Harden?
Yes, you are.
Thank you. And I dare say that actually, that listing provided a significant uptick in terms of the awareness in the market of tTech and our product, our services. And we have seen a significant amount of growth occurring just because we have been listed. Our name is frequently just in the news because anybody who watches, the updates on the stock market, they'll see the brand name tTech. And we also have been more active in marketing as a result. But certainly listing has helped us in terms of greater visibility, greater awareness of tTech, the services we provide, and we have seen growth as a result of that. The other part of the question is, how has going public assisted tTech's operations? And I say that, I would answer that by saying it has assisted our operations at several levels, but in particular in terms of the services we provide as well as at the level of the board. Let me start with the services we provide and just our whole internal operations. Because we are now publicly listed, it means that we have to do everything better than we were doing it before. We have to plan better. We have to account for our activities better. We have to report on a more meaningful basis to the market. And in addition to that, the board has had to step up and improve what we are doing with respect to corporate governance. There's a lot of information that we put in this year's annual report with respect to corporate governance, and we're indeed a part of that is this investor briefing, where what we're trying to do is keep the market better informed, improve transparency so people know what's going on inside a tTech investment community, can be more comfortable about the company and holding the company's shares. Right? So without a doubt, I'd say going public has significantly improved or helped us to improve the way how tTech operates, as well as our visibility in the market and increasing and improve growth in the business. Chris, Hortense, anything you would add to that?
I would agree. I've been receiving a fair amount of commentary from folks saying that we see the tTech brand very regularly. As you mentioned, within the first 6 months after listing, folks just called us out of the blue for various IT services, and so it was a learning curve for everybody to figure out what we did. What was your experience?
My experience was that with our brand recognition in the market and in the media, we began getting calls with an uptake in our services, and this also called for an expansion in our team members to meet the demand that we're experiencing.
Yes, that's true.
All right, great. Well, Hortense, I think this next question probably you can address because it does relate to our cash and marketable securities. Question is, tTech currently holds approximately $150 million in cash and marketable securities. Given the low declining interest rate environment, are there any plans to reallocate funds to funding growth expansion, returning capital to shareholders, so on? So basically, what are we doing with the cash?
tTech continues to scan the market both for rates to ensure that we increase and maintain our capital, also to ensure we earn good returns. So we continue to look at what the market has to offer, in particular the bond market. We also look for growth or any growth opportunities. So we also have to maintain cash on hand to meet these opportunities as soon as they come. So we continue to ensure that we are maintaining our risk levels, also that we keep the company on an even keel.
Okay, great. Thank you. And I think maybe, Chris, you could add to that in terms of speaking about opportunities for growth. Many times we are asked, is tTech going to expand outside of Jamaica? And I think we know that internally we have discussed this at length, discussed it with the board and so on. But I think it would be good for the market to get a sense as to how we view international expansion and what we're looking at for the future.
Certainly. So from day one, we've always spoken about following our customer. And one of our largest customers has investments globally. And we continue to look at the opportunities to follow that customer. Right now, we do have a resource sitting in Florida, part-time resource that continues to expand its role. And we're also looking at opportunities right now to expand our services to the UK, as one of our customers plans to make some changes in the way that they're operating within that market space. And so we have had dialogue and discussions with them. As mentioned earlier in introduction, one of our services, one of our products that we sold was actually deployed remotely. We have done that a number of times. And so as we touch these markets, every now and then, you may get a question or two as to, well, can you come and do this for us? Another customer asking. So the intention is to expand internationally, not very, very aggressively right now. And so that cash that you have sitting on there, we need some of it for that expansion, because going to international markets, you have to put your best foot out there, and we've been coached many, many times that you have to have an A team and the mindset going out there. You have to put your best, and so that is where some of that cash will be deployed. But yes, we are looking at international markets. Several meetings have been had with potential partners in North America already, and we continue to fine-tune those meetings before we make any pronouncements.
All right, Thank you. There's another question that came in that it speaks to our performance in 2017, which, as you know, we actually had a decline in profits in 2017 compared to 2016. I think the question has already been partially addressed, but since the question has come in, Chris, I'm going to ask you to comment on it. Question is, 2017's profit before tax was $18.6 million compared with $32.8 million in 2016. 2018 Q1 profit before tax $6.7 million, which suggests a 12-month profit before tax of about $26.9 million for 2018, which is still below 2017 levels. So what plans are in place to return and eventually exceed 2017 levels of profitability?
What happened in 2016 were some really big opportunities project-wise. And as was mentioned earlier, a project tends to be a one-time hit on revenue positively. And whilst we were hopeful and we were planning to repeat that in 2017, some of those projects didn't happen. So what you're going to find in this business is that you have to grab the opportunities when they come. There may be a government bid or a big bid from a private company that you respond to, and you win this year. And then you respond next year again to another similar one, and you don't win it. And so the growth in the organization will not be this amazing linear growth. It will, unfortunately, some people talk about, lumpy revenues, but the nature of IT security and IT services is going to be, this is just the nature of the business. And the plan going forward is aggressive marketing in the areas that we realize that the growth is, IT security, and our managed security, or managed services, as general managing of network infrastructure, managing of network equipment, managing of servers. The requests continue to come in, and because we have to educate the market about that. Most folks know how to buy break fix, they know how to buy equipment, they don't understand how to buy managed services that we offer. So what we're doing is educating the market so that we will try to smooth out that revenue going forward. But projects are going to come, because projects are on the table right now that we're proposing for, so we may get a big jump again in one year, and it does not the following year. So I hope I kind of explained the reason for 2016 being, really great, 2017 not so great. We're looking forward for a great 2018, though.
Okay. All right, thanks, Chris. If I could just add to that, though, I think it's also fair to say that we also are making investments to improve efficiencies.
Yes.
In 2017, a substantial amount has been spent on the deployment of technology that helps us be able to manage our customers' equipment and systems remotely, just avoiding the need for us to travel back and forth. And by the way, that also gives us the ability to manage systems anywhere in the world, as we are currently doing with respect to one customer, where we actually manage for them some of their systems in Canada, in the USA, as well as Trinidad, Belize, and Guyana. The other thing that we are doing to improve efficiencies is that this year we are making investments in what we term a professional services automation tool. I think there's some information on it in the annual report. But basically what this system is that it helps us with the management of all the service requests coming in from our customers, assigning those to our team members, and being able to track activity and follow-up. A very important part of our business is to be able to demonstrate to our customers what it is we have been doing. And it's also very important for our team members to be able to collaborate with each other in terms of what team member A is doing, what team member B is doing with respect to responding to a service request. So those investments are very much geared towards improving efficiencies. Because while we continuously see growth at the top line, we also have to make sure that that growth happens efficiently. And one of the ways to ensure that happens is by continuously making investments to increase productivity. And that's what those investments are about. All right? Now, on that note, a question did come in asking for our first quarter's results. You know, we had good growth in terms of revenue, but our cost of goods sold increased significantly by about 80%, 87% in the first quarter. So can you comment on what influenced that increase?
So with the significant contract that we signed for consulting, the negotiations around that contract included, it started out very small. It started out as us coming and just providing some IT strategy work. But with discussions with the organization, we, in our sales prowess, we discovered that there were major opportunities in the organization. And the company said to us, well, you know, guys, since you're talking to us about doing this strategy work, why not just try to, you know, build an umbrella around these other things that we're doing? Mind you, how consulting works is that we on the ground may have certain team members with certain expertise, but we have to go on the outside to bring in additional expertise, especially for areas that we don't have the skills internally. So what happened with this specific opportunity, major opportunity lasting several months, is that we had to go out and subcontract specific software engineers. We had to also go out and contract sub-project managers that we manage that environment. So the big bump in increased cost of goods came from us bringing on those additional subcontractors to manage this job. For us, it's an investment in this customer, simply because there's tremendous more opportunities in the organization. So decisions like this, sometimes you say no to, but some of them you have to say yes to because of the long-term potential. And that's why we took the yes for this one. Long-term potential is there for other work. Cost of goods was high in Q1, and cost of goods will continue to be a little bit high for the next maybe Q. So we're hopeful that more opportunities like this will bring bigger bumps in revenue and bigger bumps in profit come end of the year and towards next year.
Yeah. Let me just remind, hope is not a strategy.
Yes, that's true. Yes, yes, that's true.
It's actually one of our little sayings. Hope is not a strategy.
Yes,
Can't claim to be ours originally. It did come from one of our associates at Grace Kennedy, Zach Mars. I'll give him credit for that. Another, again, this isn't a question, but Chris, I think it would also be very good in terms of how, to comment a bit on how tTech tries to differentiate itself in the market. And in particular, I'd like you to speak a little bit about how we view the relationships with our customers and what is it that we are aspiring towards in terms of, you know, how our customers view us. And then the second part, I'm going to ask you a little bit about, you know, how we work with our team members. But let's focus on the customer first and what it is we try to do to ensure we differentiate ourselves.
So Teddy, I'll start out answering that question by just pointing to our 2017 annual report, which is available from our website for download. At the very back of it, one of our customers has written a testimonial, and it starts out by saying, and I'll read it, starts by saying, tTech is a partner. They're not a vendor. There's a huge difference between the two. We figure it out, and we get better. It's a relationship, and it's a beauty. There's a partnership. It really works for the betterment of both parties. And that's from the CIO from Grace Kennedy Limited, Mr. Simon Roberts. And so to answer the question, we try to, what we have found is, as we enter in a relationship with the customer, remember, we're not taking over our customer's IT department. We are now becoming the customer's IT department. So as a result of that, we're part of the team. It's a partnership. Matter of fact, in many instances, the customers invite us to their internal functions, whether it's their staff parties and things like that, because our team members have now become part of their organizations. So there are some organizations in which we provide all support remotely, and there are some organizations, the larger the organizations, we may have to put a team member there part-time, and some organizations will put team members, a team member or two team members, full-time. And so we have a situation where we become, and we deliver what we talk about, deliver IT peace of mind. We take the organization's IT problems and situations, we have a remediation process in which we go through, in that we go in and we dig deeply, do a full assessment, and then we take it over and start to fix it, provide a report to the C-level of the organization, the owners. So we now become part and part. So that's the main difference between what we do. So a break-fix organization, we're very experienced with that, been involved with that for the last, previous 25 years of my life, where you have a situation where you're providing products and you're providing services to implement those products. And then when something breaks or something doesn't work the way it's supposed to work, you're called in and you go when you can and fix the problem. That's very different to what we provide, or what we provide as a proactive IT support. And so the relationship with the customer now comes to rely on us, and we are now there for the customer to inform them upfront on a proactive basis as to what's going on in their environment. Do they always listen? Not all the time, because sometimes you're saying to them that, look, you need to upgrade this machine, and they're saying, well, this machine is working fine. I said, no. Based upon our data from our systems, we are seeing you're running out of this and running out of space, and the process is getting slow, because we can, with our technologies that Teddy mentioned, we can show that and show that proof. There's a proactive IT support that we offer versus a break-fix support that everybody's offer. There's a joke in our industry. I just came from an industry conference recently. There's a joke in our industry that, unfortunately, break-fix organizations are in a situation where they rely on the system to break down for them to make revenue. I don't like it. I was in the business before, and that's not true, but that's a joke in the industry. For us, we get paid to keep you up and running all the time. That's the main difference. So I hope I answered the question.
I think so. All right. Hortense, we have one for you. I think people seem to be very interested about our ability to fund growth. Question is, with no debt on the business, tTech has the ability to raise debt to either fund growth, expansion, or return capital to shareholders, with both options resulting in greater shareholders' returns. Is this being considered?
At this time, we are not considering a return of funds to shareholders. However, we, in our growth and looking for growth opportunities, we are looking at keeping our funds available for the opportunities which we expect to present themselves. And as such, we are not considering that at this time.
Okay.
Well, let me just add a little bit to that, Teddy. We have had several opportunities for partnerships and discussions with people for joint ventures. We have had several opportunities to review opportunities for even acquisition, which we continue to look at, and we're actually looking for acquisition and opportunities out there. And so, in addition to what Hortense said, I think the answer is that, the capital is there for either, one or the other. I think we're going to choose to use it for business expansion. I think that's a short version of the story.
Yes, and I think that's, I can say that is generally the feeling at the level of the board as well. And I think it's also fair to say that, tTech, although seemingly have a lot of cash on the books, we're very small, and we're still in almost an embryonic stage, 11 years old, and still one of the smallest companies listed on the market, albeit we understand a very attractive company to investors. But we have to respect the fact that capital needs to be preserved for growth, and we will always be looking for growth opportunities, particularly given our small size. Yeah. All right, Chris, early on we were asked about, growing, you commented earlier about us expanding overseas or outside of Jamaica. A question has come in about, on the reverse. It's about us protecting ourselves in the market, particularly this market. And the question is, does tTech have mechanisms to guard against loss of market share to overseas competitors?
I think one of our key one of our key advantages is being on the ground, and I think our big advantage is our team. We have a team of enthusiastic, very bright, hardworking, very knowledgeable, very hungry team members that the relationship that they build with organizations, I think it's hard for an external person to come into the market and just replace that, one. Two, the economics are different. I have had the opportunity to sit with our colleagues in North America through our various associations that we go to these annual meetings. And when you look at the rates that they charge, there is a massive delta between what we're charging on the ground here versus what those organizations charge. So the cost of our infrastructure, the fact that we are, the cost of living in our country is a little different. It's going to be very, very hard for a company doing exactly what we do to come in. The range of services and the breadth of what we offer, all the way from network management, server management, IT security, our expertise in cloud, Microsoft Azure, and the like, all the way up to PBX, because PBX is now sitting on the network, it's part of that. So the wide breadth of services as a one-stop shop to come in and replace an IT department makes us a little unique. A lot of the organizations from outside are very linear focused. They may be super experts at IT security, that's one thing. Culturally, we don't buy like that. Culturally, we have preferred to come to a one-stop shop scenario and have you sign with one company to provide your entire IT support. So just from the mere economics of it, and just from the skill bank that we possess under one umbrella with 1 month flat monthly fee, I think it will be difficult. But we are always looking. This is why we attend these events. We go maybe 2 or 3 times a year, different team members to go to these events to figure out and quote-unquote feel out what other people are doing. Are they looking at Jamaica as a market? Interestingly enough, what has happened is that they're looking at Jamaica as a market, but they'd like to partner with us, right? So we continue to look, and we continue to make sure that we guard from, we put up the forts at all the various weak points.
Okay, all right, thanks. And I think I can add to that by saying that there may be a few companies who overseas, particularly in North America, who might be looking at Jamaica. But the truth is, a country like Jamaica, in the eyes of North American companies, is viewed as a high-risk country. And they're a little reluctant to enter into that market. So the point you ended on, Chris, stating, speaking towards them seeking potential partnerships with us, I think is very important. That let's call it the company in North America that might want to get into a Jamaica or Caribbean market, they will be keener to engage with a local partner on the ground. It helps to de-risk their investment, and it also alleviates them from having to deal with the cost of putting, call it boots on the ground, getting people in place, even if it is just a sales and marketing team. All right? So I think that it's always good to be aware of overseas, particularly international competition, because one of the things we do is that we are trying to keep abreast of how the market, how companies in this MSP space are improving their services internationally, because we then can adopt some of those strategies to improve our services to all customers in Jamaica, and also help to prepare us for when we are offering our services into those markets overseas. So, this one came up at, next question actually came up at our AGM last year, and it is the potential of a tTech stock split has been floated before in the past. Is this something that is under consideration in the near to medium term by tTech's board of directors? I think I'll take that one. A stock split was suggested by one of our shareholders at our AGM last year, because what he had indicated is that there is interest in the tTech stock in the market, but stock generally are not always easy to acquire. And by doing a stock split, it would possibly increase the availability of inventory of shares available to the market. And it also has the added benefit that, the more the stock trades, well, the more PR you get, and that has other benefits that we spoke about previously. What I can indicate is that the board has actually reviewed and the possibility of a stock split and looked at what would be involved in it. And the consensus is that at this time, the costs and the effort associated with undertaking a stock split, we don't feel are appropriate for tTech at this time. We believe that our focus should be continue to grow the company, increase the attractiveness of the company and its shares in the market. That does not rule out the possibility of a stock split in the future, and it is certainly something that we bear in mind, given that it is a request that came from our shareholders previously. But at this time, we are unlikely to be undertaking it. But it is something that we will definitely consider for the future. All right? All right. Another one that came in, Chris, this is respect to, I guess, diversification of our customer base. In both 2016 and 2017, tTech's top 2 clients accounted for significant percentages of the company's revenue, 69% and 63% respectively. What is tTech's plans to diversify away from this high concentration?
When I joined the organization, the top 2 customers were a little higher than that. My job at the time was to bring it down as far as possible, which was actually achieved in about 3 years. I think we took it down, Teddy, at the time to just below 50%. Challenge, though, is that, as I mentioned, the team that we have and the type of work and the relationships we build with these customers is that we keep getting additional work from the same customers. And so we have a situation where, as hard as we try to ensure that we are diversifying and building additional revenue from by going out and acquiring new customers through our marketing events, we still have an enviable situation where the existing customers continue to ask us for doing additional projects, and also these customers are also expanding. And so in our managed services and our multi-recurring revenue model, we charge according to devices in some instances, and we also charge by the number of people that we're supporting. And if the customers are growing and they're adding more team members, and our customers are acquiring new companies, then our revenues continue to grow. And so I think we have a great problem of diversification, and which is why we have ramped up our sales team a bit, and we have put specific focus on new customer meetings weekly, new prospects, new opportunities. So we're aggressively out there doing that, but at the same time, we're in a good place where we keep getting more work. So I hope I've answered the question in terms of what we're doing to diversify. Yeah. But we also keep doing good work and continue to do good work, and there's no hope in that one.
Yeah. Yes. As you say, it's in some ways a good problem to have. A good problem to have. Because it's clearly stating that existing customers see value in the relationships with tTech.
So let me just add one more thing, Teddy, to that, where diversification may come from. We have a range of partnerships that we've been working on out there. We have an existing partnership with Microsoft, Infotech Research Group. Infotech Research Group, based out of Canada, provides tremendous help to our consulting group, because that's what they do best. They have tremendous processes, they have business documents and workflows around all the major things that a number of CIOs and IT managers would like help in: creating disaster recovery plans, digitization projects. They provide a fair amount of templates to all of these things, and we're partners with them here on the ground. We've recently entered some very, very upbeat discussions with Dell EMC. Dell and EMC have merged, a huge organization globally. They also own VMware. We have had a regional manager visit us recently and express great interest in partnering with an organization like us. We're one of the few people that are out there providing pure play IT services. And so they need someone on the ground to help them with implementing their equipment, especially their higher-end complicated equipment. So we have had discussions, and those discussions are moving forward. And that's one of the angles that we're going to see diversification of that income stream. We're also, Microsoft continues to, whilst Microsoft, their growth area is in their license, our growth area for Microsoft is in the cloud and cloud provision. So Office 365, Exchange Online, moving people into the cloud, that's what we've been doing for them. But more importantly, we are having advanced discussions. We met with the regional manager, the Caribbean manager for Microsoft last month, and they want to sign us up to a high level of partnership where discussions have started for us to provide, again, more specific IT services. So coming out of that, we will see additional growth outside of the traditional areas that we will see. So that's where that additional support will come from.
Okay. All right. Great. Thank you. Sounds exciting. We are coming up towards the end, so just want to remind participants that if you have any questions, please send them to company.secretary@ttech.com.jm. Okay. A question came in, Chris, while you were talking a while ago. This one is about changes that have occurred board and management level, so I think I'll respond to it. The question is, the board and management of tTech has recently gone through key changes with Edward Alexander becoming chairman and Chris Record assuming the role of CEO. How has this transition gone to date? What plans does the Record have to grow tTech's business and continue to drive returns to shareholders? I think it's fair to say that Mr. Record has already answered the second part of the question during the course of this briefing.
Can I say it again?
About plans for growth and increasing returns to shareholders. But the other part of the question, the first part, is how has this transition gone to date? And let me comment on that. And Chris Hartens ask you to give your own thoughts as well. First of all, let me just give a little bit of background or reiterate some background that has been stated before. Why the changes? Well, first and foremost, our chairman up to the end of February this year, Philip Alexander, who's actually my brother, he was a chairman at the time that we did our IPO and the time that we listed on the stock exchange. And, he's provided really sterling service and leadership to us. But during the course of last year, he actually had to relocate to the USA. So he's been living in New York since last year. And what we're seeing is that it's become increasingly difficult for him to run the board effectively, being resident outside of Jamaica, and also being the only board member who is outside of Jamaica. So we felt it best, realized that it would be best to actually have a chairman who actually is resident in Jamaica. The second reason for the change is that I have been effectively the head of the company for 11 years. I was a founder of the company going back to 2006. I was the largest shareholder at the time. I still am the largest shareholder of the company. I've been the CEO since inception. And the reality is that organizations find themselves like this, find themselves in situations where if you don't have a change in leadership, the organization never gets a chance to refresh. And I am a firm believer that people who hold positions of leadership should be willing to relinquish the leadership role at some point, and relinquish the leadership role before the organization goes stale. When you are in that position, founder, CEO, largest shareholder, the truth is you actually unknowingly can actually stifle growth and innovation in the organization. Why? Because you know the company so well that it is very difficult sometimes for people to challenge what you're saying. And the truth is, when you have been in that position for so long, what happens is that you begin to look at the organization through your lenses and your lenses only. if you're going to effect change and effect meaningful change, you have to be willing to not just have people challenging you, but you have to be willing to have people take on positions and come forward with new ideas and give those ideas a chance to be fostered and a chance to grow. And I have, over the last couple of years, really made an effort to strengthen and build the management team at tTech, not just because we were going to list publicly, but because I realized that without that, one would never be able to grow the company. I certainly could only carry the company so far by myself. I was very fortunate that in recruiting Chris, and I'll mention, and there are other executives, Norman Chen, who came to us and is head of our technical services, Marcel Smart, who is head of our consulting team, and several others, Omar Bell, Eldon Reynolds, Gillian Murray, who is now our company secretary, Hugh Allen, who was also with me from outset. These are all people who, along with myself, with Chris and Hortense, have really been the ones to build the organization. And I've been very fortunate in that I have had the ability, and the timing has been right, for me to be able to hand over the leadership to Chris at this time. And I firmly believe that under Chris, with his stronger focus on sales and marketing, we are going to see tTech being taken to the next level, and it's an opportunity for real change and growth and innovation in tTech. So I certainly believe that it is for the good. I also can say that I think the transition has gone very well. The transition was not done on a whim and fancy. We did go through quite a bit of planning and preparation for it. We involved Joan Marie Powell, our director, who is the chair of our remuneration committee. The board was fully informed and in agreement with the strategy that we had decided on. We went through assessments. There was a period of mentorship and so on for Chris, and tremendous preparation for the change. And I think that has gone very well. Like any change, there are going to be a few bumps on the road, but personally, I think it's gone very well. I certainly am enjoying my new role as executive chairman. Also glad, happy to re-advise that we actually haven't lost anyone. I'm the executive chairman. Philip has continued as a director, and Chris is there as our CEO. So I think we're in a very exciting period for tTech, and we can look forward to continued growth and new bouts of innovation under Chris's leadership. All right.
Well, although I've answered the question, the last part of the question that was answered, that was asked, I think I've answered it maybe 2 or 3 versions. I'll add a different version of it right now. Some people are guys that like to talk, right? So I prefer to listen than to talk. Ask my wife. When I joined the organization, 2013, I was English. 2013, I was even in Jamaica at that time. 2013, this organization's main sales came from its relationships out there. Teddy had a lot of executive relationships with the Grace alumni, and those folks would just call. They leave the organization, they go to the new organization where they're becoming at a C level, and after 2 or 3 months of experiencing internal IT, having had the experience from tTech, the phone calls just came in, and some of those calls are still trickling in. The main difference that I have attempted to do is put in a sales process and start to leverage more of my relationships in the industry. I've been in IT for the last 31 years. A fair amount of my relationships are technical, but interesting, a fair amount of those technical have moved to the C-suite, and they're now within management, within the management suite of their own companies. And so we've been knocking on some of those folks' doors. I mean, up to yesterday, I got a call from a colleague who I haven't spoken in 5, 6 years, and we have a meeting set up for next week. So those things continue to happen on a weekly basis. So it's more aggressive sales out there, Teddy. It's touching the road. It's shaking hands with those relationships and going back to basics with the regular underground type of selling. Marcel, what's your experience been? I'm here with Marcel. Hortense, what's your experience been?
I see it as a master execution of strategy. This was something that was planned for, and as Teddy has said, we have not lost anybody. We still will maintain our relationships. We have the full support behind Chris. We will work with his high energy, and we are prepared for the next growth phase of tTech. So we see this as a very smooth transition, and we are all behind him, and we look forward to next levels.
Okay. All right. Thank you, Hortense and Chris. Well, ladies and gentlemen, we actually have no more questions. We're nearly at the end of the time. I think, Chris, Hortense, your comments are an excellent note to close on, because it very speaks about the transition that has taken place and speaks to the future of tTech. So, ladies and gentlemen, and again, I would just like to thank everyone for participating, particularly those who joined us, over the internet. I'd just like to indicate that this was our first investor briefing, so we are looking at plans to try and have this briefing probably at least once per year. We think that it's, again, very important part of what we have to do, really, to inform the market about tTech, about what we're doing, and give a chance to clarify any questions or concerns the investment community may have about the company. I would really like to thank those who submitted their questions. They were very insightful. I can say that I did squirm a little bit when I saw some of them. But I think that those are the questions that are meaningful and allow us to force to look internally to see what is required to improve, what is required to continue to grow the company, what's required to meet the needs of the market. Because it's not just about meeting the needs of our customers and so on. So again, ladies and gentlemen, thank you very much. Thank you everyone for participating. Thanks for taking the time to join us. We hope that you have found this to be informative. We certainly have enjoyed doing this, and we look forward to meeting with you again in the future. Thank you very much, and have a great day.